All right, we'll go ahead and get started. And for everyone, I just added the slides for this presentation today to the handout section. So if you click on the handouts tab of your webinar control panel, you'll be able to download the slides. So you won't have to worry about emailing myself or Saxon, although feel free to do so if you have some additional questions at the end of it. But with that said, let's go ahead and get started. Let me just make sure everything is sharing correctly and recording. All right, looks great. So again, if you do have any questions throughout this presentation, please make sure that you do either type those into the chat box or that you email myself or Saxon. Now let's go ahead and get started. Today we're going to be covering investing in private equities and startup companies utilizing your self-directed IRAs. My name is Alex Perney. I'm with Advanta IRA. If you'd like to contact me after the presentation, there is my email and contact information is up on the board. And I'm pleased to welcome today Saxon Baum. Saxon's with a company called Florida Funders, which is a local investment firm here in the Tampa Bay area that focuses on emerging technology companies in specifically in the state of Florida, but also nationwide. They're leading a great presence in getting a lot of interesting and new companies to market. And he is a consummate expert in what it takes to identify these types of investments, what goes into investing in these types of things. He's going to talk a little bit about his platform that he has, and also just some great general information when it comes to using your IRAs or your funds in general for investing in alternative assets such as private placements. So Saxon, thank you very much for being on here today. He'll chime in a little bit later on, but I'm going to do the front load of the IRA portion of this, what exactly it kind of means to be using your IRA, who Advanta is, and we're going to hand it over to Saxon. So some of the key points I want people to take away from today are the key differences between private and public sector investing. Most people are really familiar when you talk about buying private stock or some type of security that they're talking about something you can go and just buy off the New York Stock Exchange, something like Apple or Amazon or IBM. But all of those companies had to start somewhere. They didn't automatically just jump out of someone's living room or garage or start up and end up directly on the New York Stock Exchange. And then what we're focusing on here today is that period when companies are looking for the initial set of funding to get off the ground or to get their product to market, and being able to invest in that portion of it to be able to realize the incredible gains that can be seen when you're able to invest in something that is not yet publicly traded and that has a much greater value to invest in early on. The different types of private placement opportunities, not everything is just going to be an equity investment. Sometimes you can invest in debt instruments and other types of different types of securities when they're in the private sector versus the public sector. So understanding some of those different aspects can be very key. And some key terms to understand when investing in this type of realm, such as what is an accredited investor? What exactly does it mean to have an equity investment? What are debt instruments, and much more. So there's some terminology I want people to take away from today, but what we're trying to give is a very high level understanding of what exactly investing in private equities means for an IRA investor. A little bit about Advanta IRA. We're a self-directed retirement plan administrator serving clients nationwide. We provide clients with exceptional personal service, experience, and knowledge that is really key to helping people understand how to administrate self-directed IRAs. And the key in that is that we handle everything from private equity investments to real estate to mortgage lending to cryptocurrency to forex trading. So we do have to have a lot of information at our disposal and experience in order to be able to effectively do that for our clients. Now, before we get started, Advanta IRA and our employees, we do not provide any investment advice, nor do we endorse or promote any investment products. All information and materials are for educational purposes only, and all parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering into any type of financial investment. So what is a self-directed IRA or 401k? Simply put, using a self-directed retirement account allows you to keep your qualified retirement funds underneath the existing tax shelter while investing in alternative assets. You're not just restricted to investing only in publicly traded assets. Now, when people most often think of using their IRA to buy stock, you think of, hey, I'm just going to go to a brokerage firm and then I'm going to buy these types of securities. Now, if you've ever maybe thought about buying into a private company, and using IRA funds. If you're with someone like TD Ameritrade or Fidelity and you mention to them that you'd like to do that, they'll tell you that you need to take a distribution and pay taxes on the funds that you're taking out. Now, obviously, that's not a very good deal for most people. You don't want to have to pay, exorbitant amounts of taxes just in order to make a investment placed with a private company. So we allow for you to do that underneath the tax shelter of an IRA. And the other great thing about the way that we operate is that we don't have any direct investment as a company in any of the companies that our clients invest in. So if Florida Funders is providing investments in companies A, B, and C, and we have clients that might be invested alternatively in their competitors of X, Y, and Z, we're never going to have a conflict of interest. So if you find something out there that you feel like would be a good fit for your IRA, or that you'd like to make work with under the construct of your IRA and whatever deal that might be, we're never going to have a conflict of interest. So that's something that does come up within the private equity investment realm, but it's always good to know that the way that we operate will never have a conflict of interest with your investment strategy. Now, why do people choose to self-direct, especially in this realm of investing and into private equities? It's a new source of capital. If you're looking to invest into a lot of different alternatives, or you're looking to deploy more of your capital into a certain investment structure, this will allow you to do it. You don't necessarily have to draw everything when it comes to private equity investing from your personal funds. The service that we provide allows you to use your IRA retirement in order to invest in these types of alternatives. If you're coming to us from the aspect of already being an Advanta client, the nice thing is that now we're offering, or I shouldn't say now we're offering, but we do offer the ability to expand the types of investments that you're doing. Most of our clients are really used to things like real estate and lending. They're not so much familiar with being able to invest in companies past just maybe a private LLC or a partnership for some type of real estate deal. You can absolutely use your IRAs as an additional source of capital to invest in private companies. Maybe if you're tired of the stock market with your other IRA holdings, this will give you a good alternative to investing in some of the extremely high volatility stocks that are out there. I know, especially with today's market with elections and COVID-19, there are a lot of external factors that can affect pricing and one's interest and one's ability to effectively invest in the public sector. And the private sector might offer, although a different set of challenges, a new perspective on exactly what you're doing. And obviously the tax benefits of doing it, anything that is going to be returned by the IRA investment, most people are, obviously familiar with rents, but dividends, profits are all going to be returned tax-free or tax-deferred underneath the tax shelter of the IRA. So all of the tax benefits that you're used to with your real estate investing, if you're familiar with us, or anything else, is all going to be maintained directly if you're investing in a private company with your IRA. So, and then again, to why to use this, again, you're being able to keep these types of investments underneath of your tax shelter of the IRA without having to pay taxes personally. Again, a lot of people do hear that if you're going to invest in a private company, if you talk to your normal broker, let's say someone at Fidelity or TD Ameritrade, they say, hey, if I'd like to do this with my IRA, you'd have to take it as a distribution. You need to do that through someone that's familiar with it, such as Advanta IRA. Now, with anything that Saxon is going to cover today, and especially with what I have covered so far, you can use really any of the self-directed plans that are out there in order to make this type of investment. It's not just going to be simply centered on the traditional or Roth IRA, although those are very popular plans. Now, the traditional IRA, just to kind of give people and make sure that we're starting with a good basis here, if you have an old 401k that you might want to use for this type of investing, more often than not, you're going to roll that directly into a traditional IRA. That is going to be your tax-deferred growth, your deductible contribution basis plan, meaning that all the money that you put into that, you are electing to pay taxes on at a future date. But none of the returns that are seen by that plan in the present day are going to be taxed. So it's a great vessel for keeping your current taxation low. Now, for those that maybe want to take advantage of specifically lower tax rates that they have presently now as opposed to what they feel they might be paying in the future, Roth IRAs are another great option for people to use. You can do Roth conversions by moving funds from a traditional to a Roth IRA and claiming that income in a given year. You can just make contributions by making after-tax contributions to a Roth IRA. They're extremely effective tools, but the good thing is that not one type of plan is going to fit everyone. So whatever type of plan that you have or maybe that you want to use in order to invest in private equities, you can use. You're not just going to be able to say, hey, well, I only have a traditional IRA and I need a Roth IRA to invest in this company. It's certainly not the case. Any type of plan can be used to invest in private equities. Now, it's not up here, but one thing I would like to bring up is that as of November 1st, so two Sundays ago, we entered into open enrollment, which means that if you are buying your healthcare coverage on the Affordable Care Marketplace, that you have the option to buy new coverage. Now, if you want to use a health savings account, and I have seen this, although it's not as popular, but I do find it very interesting. If you want to use a health savings account to invest in private equities, we also do offer that type of platform as well. So if you'd like to learn more about health savings accounts and how to effectively contribute to those and use those types of plans, I taught a presentation on it about 2 weeks ago now. It's on our YouTube channel. Please go and check that out. But I explained how you can use HSAs to invest in alternative assets as well. Now, without getting too far into that, you can also use individual 401k plans. If you have a defined benefit plan, we can do the cash balance reporting for that plan. We can also do cash balance plans for 401ks as well. So if you have a small business that already has an existing 401k and you'd like to invest some of those funds into private equities, we can also help out with that. And even if you have older, more antiquated pension plans, we can still use those in many capacities to help you with your goals of investing into private equities. Let me just double check real quick. Please do make sure that if you do have any questions that you are typing those into the chat box, as everyone has been muted. Let me just double check before we get too much farther, because I think I am about to hand this over to Saxon. All right, and with that said, again, remember any type of plan that I've covered you can use for the types of investments that can be done through Florida funders that Saxon is certainly a good expert on. Remember, type in any of your questions into the chat box, and with that said, I'll turn it over to Saxon Baum with Florida funders.
Thank you, Alex. Is everybody able to hear me? Alex, can you hear me coming through all right there?
Yeah, I can hear you just fine.
Great. So as Alex said, my name is Saxon Baum, and I'm the VP of Investor Relations at Florida Funders. Just so that everybody knows, to level set the stage, Florida Funders is an early stage venture capital firm. So we are investing in early stage technology companies all over the state of Florida and around the country. And really our goal is to invest in the best and brightest tech companies in the country. We're located in Florida, so we do invest in companies that are headquartered in Florida, but we'll also invest in companies that are willing and or have established some sort of presence, nexus, some sort of impact on the state of Florida. Now, the interesting thing for us is we actually have a hybrid business model where we have a venture capital fund. We're currently raising our second venture fund right now, but we also have an angel investor network. So when we go out to do an investment, our fund will lead the deal, and then our angel network will have the ability to follow alongside that investment. And I'll get into that a little bit more in terms of the structure of kind of who we are. But what do we look like? We're 15 full-time team members. We have an investment committee of 7. We have about 1,500 accredited investors that have signed up with us on our website. It's completely free to do. And then they have the ability to invest alongside of our funds. We have invested about $32 million over the last 3 or 4 years, 44 total companies and 73 total transactions. So in total, we're now, as I said before, raising our $75 million Fund 2. We have an $18 million Fund 1 that is fully deployed. We have a seed fund that we raised with the University of South Florida. And then in about 2019, we were awarded an RFP. We won an RFP to manage the State of Florida Institute of Commercialization Evergreen Fund. So we also manage that as well. And just to sort of get into it, what is sort of venture capital, private equity? Alex talked a little bit about these things. And I just want everybody to understand what we're talking about. When looking at private investments, so these are companies that are not governed by the New York Stock Exchange. These are not companies that are traded on a public market. These are private companies. There's different levels of investment with private companies. Usually the first level that you see is angel and or seed investing. And then you get into venture capital. So venture capital is really the second level of private investing. Most companies inside of venture capital are from a revenue basis anywhere from 250,000 to a few million in annual revenue. And usually the goal is to invest in a company and then that money be used for sales, marketing, and growth. So we today are talking about venture capital, but there's all types of alternative assets that you can invest in with your Advanta account, being real estate, being private equity, which is just what we do on a larger scale, would be private equity, or you can invest in venture capital. So we have a lot of clients that will invest either into our funds or directly into deals via their Advanta account. I will say I am actually an Advanta customer myself. I will do deals through the Florida Funders platform, invest in companies directly on the platform, and I will do that through my Advanta account, which I've rolled over from my Roth IRA. So that's a little bit about what we're talking about today. I mentioned before that we only invest in technology. And really, we only invest in companies that fall within one of these 7 categories. So the gig economy, which is the Uber type of business model, educational technology, digital health. So these are not anything that would need to be FDA approved, no pharma, nothing like that. It's strictly digital health companies, so usually software in the space. SaaS software, so this is software as a service business models, enterprise, business to business SaaS software, e-commerce, financial technologies, and then finally cybersecurity. As Alex mentioned, we're located in Tampa, and as of late, we've had some really exciting companies in cybersecurity grow and be built in Tampa. So now we're seeing some really nice organic growth with those companies as well in the Tampa Bay area. Now, once again, we invest in companies that have a presence in the state of Florida, but they don't need to be headquartered. So we do sort of have a double bottom line where we are out to make the best returns possible for our investors, but we also are out to make Florida known for tech and innovation, not just Disney World and oranges. We are out to really make the state a place where people can go and have meaningful jobs and start careers, and young people can come here and work for great tech companies. That is our goal. So that's really what we focus on at Florida Funders.
So Saxon, that's a great point that you bring up. But I have a good question here, and maybe something good to touch on. Had a question indicating, is being an accredited investor required to invest specifically with Florida Funders? And then also for Saxon, are angel investors allowed to invest in any deal the fund invests in?
So the answer is Florida Funders, the way that we're set up, we are only set up to take accredited investors. There are other platforms online that you can invest in being non-accredited, but we are an accredited only platform. In terms of the fund, and just so that everybody knows, excuse me, accreditation basically means that you either have an income from an individual standpoint of over $200,000, or you have a net worth of $1 million excluding your house. And from a couple perspective, it's a $300,000 income limit. So that's what we're talking about from the accreditation standpoint. Now, when looking at Florida Funders, our fund, about 2/3 of the deals that our fund invests in will actually go out to the network. So we do have some exclusivity. 1/3 of the companies will not go out to the network, but 2/3 of the companies do. And think about our investing like a hierarchy. The first money that goes into the company will come from our venture capital fund. That's the fund that we're raising right now, if anybody's interested. And then what happens is we go to our VIP investors, and they have a 7-day window before the deal would go live to the angel network to be able to decide whether or not they would want to invest in the deal. And then finally, whatever the excess amount is in terms of what's left over in the raise, after those 2 programs get a bite at the apple, that then goes out to the angel network. So when it goes out to the angel network, we do things like webinars and different meetings so that our angel investors have the ability to look at the company, meet the CEO. Pre-COVID, this was all done in our office. This is something that Alex was a big part of. He would come, meet the founders, understand the company. Now it's all done via webinar. So if interested on the Angel Network, it's completely free to sign up for. All you do is go to floridafunders.com and you'll be able to sign up for an account and get approved and then have access to the deals and the webinars.
And that's a great point that you bring up of how that's all structured. But just for to kind of, some people that maybe heard about, let's say, you have a nephew or a niece or someone that is investing in a startup, although to invest in a platform such as Florida Funders, you do have to be an accredited investor. That's a Security and Exchange regulation that governs, the ability of individuals to invest in deals that are on platforms, and then sometimes in what are called solicitations. Well, that's a little bit of a different playing field. If you do find a deal, what a lot of people like to call friends and family that are looking to raise money, you're able to invest in those types of deals as well with your IRA, not necessarily needing to meet the threshold of being an accredited investor. However, if you don't invest through a platform that has, some of the due diligence aspects that companies like, Florida Funders have, you and then our turn are responsible for, getting a lot more of the information that might be able to be easily provided by a company like this, and are responsible for doing it on your own. Obviously, at that point, your risk increases, but the reward, if you're a really, really early investor, past just when any type of institutional, that's literally just individuals investing, could be significantly higher. So although we all talking about all the great services that are offered from a platform standpoint like this, and also the research and everything that a company like this can help you do, if you do find something out there that's off of a network like this, and maybe you don't quite meet that threshold, but you do have a considerable amount of money, or you do have IRA money that you're looking to deploy, that is another option. But just keep in mind that if you are doing that, the risk does go up with the fact that these companies are typically going to be a lot newer. Maybe they don't have as much of a proven product sales track record or marketing record, what's what I'm looking for, or consumption rates maybe on different types of platforms that you would be looking at to invest once a company has made it to the point where they can have a investment firm like Florida Funders be looking to invest with them.
Yeah, that's a great point, Alex. And just to reiterate that, so Florida Funders is a professional investment firm. We work with, we have a full-time team that's doing all of the work on our side. If you're interested in just investing directly into companies, you could be hanging out at the local incubators, accelerators, universities, and Advanta still provides a great way to be able to, take some money that you might not have thought would be able to be used for these types of investments, be able to sort of set it and forget it over in some of these companies. And hey, if there's a huge return, depending on what type of tax deferred or tax structured account you have, you're not going to have to pay taxes on that money. So it's a very interesting way to take some bets on early stage companies as well.
Yeah, great point, Saxon.
So just so that everybody is aware, Florida Funders is the most active VC firm in the state of Florida and the most active VC firm in the southeastern part of the United States at this point. So we've been able to really build our reputation over the last 5 years or so with groups like Advanta and other investment firms that really trust us and come to us for these types of investments. So it's been a really good run for us thus far, and we're looking to continue to build on all of that. Now, as Alex said before, I'm not here to give investment advice. I'm just here to state the facts. If you look at how venture capital in seed investing has returned money over the past several years, if you invest in venture capital and you invest in seed investing and you do it the right way, so either investing in a fund or investing in 10 deals over a 2-year period, it actually outperforms the other asset classes. And so if done right, you can do very well with this type of investing. The other thing that I'd like to mention here is when looking at the public markets at this point, it's very hard to achieve the similar returns that you were able to achieve over 30 years ago in the public market. And what I mean by saying this is when companies like Apple, Microsoft, Oracle, Amazon, when these companies went public, the market cap or the market value of these companies was very small compared to where they are now. And basically what that means is they went public for liquidity. So they went public because they wanted more money to grow and run their business. Well, at this point, there is so much money in the private market, being private equity and venture capital, that by the time a company goes public, like an Uber, there's already a valuation of that company anywhere from 50 to $70 billion. So to be able to make a 10 times return on your money, it's going to take a long time and it's going to be very hard to get there. Where in the private markets now, you really are seeing people make outsized returns 10 times, 20 times, 30 times, 50 times, even 100 times your money. And this is happening in the private market. So if you were an investor in Uber as a seed investor and you put $25,000 into that company, the day of the IPO, that was worth $125 million. Now, am I saying that that happens every day? No, absolutely it does not. But the fact that a return like that is possible, that's possible because of an investment that was made inside of the private markets. So there's just so much money to be made inside of venture capital, private equity, and angel investing at this point that to get those outsized returns, it's really, looking at these private markets.
Now, what type of timeline, and maybe you do or don't know this, what kind of timeline does it take typically from when a company is going to raise their initial round of funding, let's say a Series A type round, which for those that are listening in, a Series A would be like the initial offering of private stock that they're doing. So if they're initially offering an equity round, it'll be Series A, then B, C, D, going on down the line. It's kind of how that nomenclature works. So from the time that a company is offering, let's say, a Series A round or their initial public or their initial funding round, what kind of timelines do you see from them going public? I know it probably ranges, but is there any type of benchmark for that?
It's a good question, Alex. We tell people, and just so that everybody knows, the majority of what we do is Series A. So we tell people 3 to 7 years per company is usually what you're looking at in terms of how long the hold period is. And these are very illiquid investments. So you're either looking for the company to go public, the company to get bought by a strategic player, and or for the company to get bought by some sort of investment firm, either private equity or venture capital, and then they buy out the remaining investors that are on that cap table for the investment. So it's about 3 to 7 years from Series A. If you look at seed, maybe it's more like 5 to 10. So these are not quick investments. You're in it for the long haul. But if all goes well, the returns will make up. If you make a 10 times return over a 7-year period, your IRR in terms of what's your annualized return is going to be much higher than mostly every other investment that you could make.
Yeah, that's a great point. And another good point that you brought up is the illiquidity of these types of investments. If you're going to be investing in private equity, the biggest thing that I can implore anyone, especially on this call, to do is do your research and understand that the investment that you make into this type of investment structure is not going to be something that's a 1-year play. And even if you do want to have some type of extra strategy built in, that might be significantly harder than if you were even invested in something like real estate. Sometimes these things are actually restricted securities, meaning that when you purchase them, written into the documentation of that, there's an agreement that you cannot sell it, without other types of extenuating circumstances being arrived at. So understand that the returns can be great, but the biggest thing that I want people to take away is that with investing in any type of new structure, education is key, and that's what we're here for. That's why we bring people like Saxon on to help educate people. Is that when he does talk about a great IRR for the individual rate of return over something that maybe returned at 10x over a 4-year period, that can be very, very good. But at the same time, that type of return is realized once that company went public from the time that you invested in that private entity. So for that 4 to 6 year period, maybe you really couldn't do anything with that asset except wait till it went public and you could sell it on a securities market. Looks like we got a couple questions. Let's look at this. When you invest in, so this one's for you, Saxon. When you invest into the fund, is it into one company or the portfolio of companies? Now, I know that's probably a pretty good question for you because there's a few different ways that works on your platform. And then after that, what is the minimum investment into the fund itself? And I know that's probably another good one because there's a few different ways to do that as well.
Yeah, absolutely. And I appreciate the question. So in terms of our fund, being the Florida Funders Fund 2 that we're raising right now, that money is deployed across what will be 40 total companies. So you as an investor invest with Florida Funders, and then Florida Funders would invest into 40 total companies. And then we reserve 40% of the total capital for what's called follow-on investments. So as investments are continuing to perform well, we will continue to invest in those companies. So those are the follow-on investments that we're making. When looking at the minimum investment for Fund 2, it is a $500,000 minimum investment, so $500,000 minimum investment. But that money is on what's called a capital call structure. So you never would owe all that money up front. It's basically 20% upfront, and then the remainder of the money will be called over a 3 to 4 year period. So over 3 to 4 years, you'll get what's called a capital call from Florida Funders, where anywhere from 10 to 20% more of the capital will be called, and then you'll have 30 to 45 days to be able to fund that capital commitment. So that is for the fund. When looking at our VIP program, the minimum investment is $50,000, and you have the ability to pick and choose the deals at that time. So the fund, you're in every deal that we decide. We manage the money just like a mutual fund. If you're going the VIP portfolio select method, that is more like picking and choosing individual stocks, where you would put a minimum of $50,000 with Florida Funders, and then you get to pick and choose the deals that you would want to do. So it relies a little bit more on you to make the decision. And then the final way is the Angel Network. So if you're a part of the Angel Network, it is completely free to be a part of, but it's a minimum of $5,000 per deal per investment.
Yeah, and that's really kind of the interesting one, is that although you still have to be an accredited investor, starting with that fund, $500,000 is a sizable commitment, but you get the benefit of spreading your investment over the whole portfolio of everything that you're investing in, all the way down to being able to kind of pick and choose, $5,000 different investments is a really cool option. So you kind of get the ability to really kind of pick and choose, but obviously with the decrease in variety comes an increase in risk. So if you're only picking one or two, you don't get the benefit of the additional variety that would hedge your risk on that. And then let's see, we got another one coming in. Do you have an example of how a $50,000 investment has been done in the past? Yeah, absolutely. Go for that one, Saxon.
Yeah, so there's sort of two methods here when looking at $50,000. $50,000 could be put in the portfolio select program, in that a lot of our investors will start with $50,000, and then they'll do individual deals at $5,000 or $10,000. So it sort of works like a debit account for Florida Funders. So let's just assume in that first scenario, you have an investor that invests $50,000 with us. They put $10,000 into one deal. That one deal, let's just say, returns a 5 times return. So on your $10,000, you're going to get $50,000 back. So you have a gain of $40,000. You would get back your $10,000 from us, and then we would take 20% of the $40,000. So we take what's called a 20% carried interest. So that's how that would work for the VIP program. For the direct angel investing, let's just say that you took $50,000 and put it into one company. Same scenario, company exits, let's just say it's a 5 times return. So you would make $200,000 on that total return. We return the capital to you. We take 20% of that $200,000. That would be the way that you would invest $50,000 with us. My best advice would be, if you're interested in an amount around $50,000, to do the VIP program, to speak with me about that, and then to start with anywhere from $5,000 to $10,000 per company. So with your $50,000, you can build a portfolio of 5 companies at $10,000 or 10 companies at $5,000, and then you have a really nice portfolio of early stage companies.
Then we have, and then we'll do one more question before we get to your next slide. Depending on the platform, I think you kind of cover this, but one individual asks, am I getting Class A shares, or is there another group of investors who get priority over us?
No, so everything is directly in line together. You would always have the same shares as everybody that's investing with us. Now, if the company does another round after us and there's another share class, that's not something that we can control. But in terms of our actual investment, you as an individual investor, compared to somebody that would be in the Florida Funders Fund 2, would get the exact same share class, the exact same deal, the exact same everything.
All right, great. Yeah, we'll go on to your next slide. That's all the questions that we got.
Perfect. I love this slide. So a lot of people asked me when COVID first hit, what should I be doing? Where should I be putting my money? Does it make sense to be investing right now? And our answer was there's never been and never will be a better time to invest than when there's some sort of adversity. So in 2008, 2009, we had the financial crisis. All of these companies up top here that I'm sure all of you recognize came out of needs, came out of innovation that was innovation to solve problems that were created during 08, 09. And we believe we're in the same type of situation right now. Adversity creates opportunity. COVID has been very tough for a lot of people. All of the turmoil from the election and everything that's happening. We believe that areas like telehealth, telemedicine, remote working, educational technology, all of these types of services are going to become more innovative, are going to be needed even more. And there's a whole slew of technology that's basically going to come out of this. And really, we think it creates an amazing opportunity. So I always give the example of in every 10 to 15 years, there's a new wave of technology. So call it 1975, the PC comes out, or it was actually 1979, I believe. The personal computer comes out and changes our lives. Fast forward to 1995, you have the internet come out, changes our lives for how we know it today. 2006, we had the smartphone and cloud computing come out. Obviously, things like the App Store, Apple, and all different sorts of cloud computing, SaaS software came out. Now in 2020, we're on the precipice of about 10 game-breaking technologies: augmented reality, virtual reality, quantum computing, 5G, autonomous vehicles, cryptocurrency, and blockchain. I mean, all of these things are happening at one time. And so we really believe that there's never been a better time to be an investor in technology. And our sort of opportunity statement for Fund 2 is being the most active venture capital firm in the Southeast, in an underserved market, being the Southeast, with unprecedented investment opportunity. We really believe that there's never been a better time to invest with Florida Funders into one of our funds. We're super excited about everything. And I really appreciate, Alex, you giving me the time and the opportunity to speak with your people here today about Florida Funders, venture capital, private equity, and sort of the private markets. And if anybody has any questions, not just Florida Funders related, but anything venture, angel, anything, you can ask me now, and or you can email me, text me, whatever works for everybody.
Yeah, so I have a couple people asking regarding actual performance of and figures and stuff like that. We can't actually get to that on a call like this, but if you do have questions regarding things that I have seen that have happened for clients, I can obviously give you kind of rounded ideas on a direct call, or if you have something specific to Florida Funders and their operations, feel free to give Saxon a call directly. His information is right up there. But we're going to keep the presentation at least free of that, because this will get shared and put out on our YouTube. So we want to make sure we stay in compliance with that. But a few things I just want to kind of go over that I don't think we touched on are, does Florida Funders do any type of convertible debt deals that are on their platform? And could you speak to a little bit of what that means? Because sometimes people might see companies that are looking for money that are offering what might be called a convertible note. Maybe they're not exactly familiar with what that is. Everyone's kind of familiar with, hey, I'll give you shares of my company, or you can buy in and own a piece of my company. But when someone hears, a convertible note or, a debt instrument, those terms might be a little bit unfamiliar to people.
Yes, absolutely. So a convertible note is something that basically earlier stage companies that have minimal revenue will usually use, or companies that are trying to have a bridge round, which is basically an in-between round to their next larger, what's called priced round or equity round. So a convertible note is basically just a debt instrument that a company would offer to their investors that basically has a few different pieces on it. So you would give a note to an investor, and let's just say they would give you $100,000. Well, for their $100,000, they don't yet have equity in the business, but they have what's called an option to convert that note to equity at either a further financing round or some sort of trigger that's put in place by the company. And then inside the note, there's a few different pieces. So it's called a discount rate, and then there's an interest rate, and then there's a cap on the note. And basically what that means is the discount rate is when this does convert upon the trigger, you're going to get your shares at a discounted price. So usually that number is 20%. Then there's interest that accrues and is paid out via equity. So that's usually anywhere from 5 to 8% on an annual basis, and that accrues. And then finally, there's what's called a valuation cap. So the cap is basically putting a number on the note that says this note cannot convert to equity at any price higher than X amount of dollars. So your $100,000 investment, you're either going to get a discount of 20% to the next share price, or your monies are going to, your debt is going to convert to equity at that valuation cap, whatever is better for the investor. So whatever number is better for the investor, either the 20% discount or the valuation cap, that's going to be what your note or your debt would convert to on the equity side. So think about if you're an early investor in Uber, let's just go back to that. Let's just say the seed round was done at $5 million. Then there was a note that was done. And let's just say the cap, the valuation cap on the note was $10 million. Let's say that you invest in the note and then the company goes gangbusters. And the next round, being Series B, is raised at $100 million. Well, instead of your note converting at $100 million, your note's going to convert at $10 million because of the valuation cap protection. So it basically is a protection for early stage investors so that they don't get very diluted or crammed down as the company continues to do well. So long answer, but basically, yes, we will absolutely do notes. The majority of our rounds are priced, so the majority are equity. But when it's a bridge round and or it's an earlier stage company, we will absolutely invest in a convertible note. We will not invest in what is called a safe note, which is basically a note without any interest or without any what we call teeth in the contract. It's a West Coast investment tool that really came out of Y Combinator, which is one of the more successful accelerators in San Francisco, and that's called a safe note, SAFE, and it's not a debt instrument like a convertible note is. Although the goal would be to convert it, there's no interest and there's no trigger on that. It's just done upon conversion.
No, great. I think that's kind of covers the big key terms there. We did have one individual, Edward had a question. I'm going to email you that question because it's a little bit more technical, and you can just confirm that it's to do with like investment amounts and a specific structure for him. So Edward, I will send that over to Saxon, and then y'all can connect directly on that. But that's pretty much it for the presentation. You know, we're butting right up on about 50 minutes of content right now. So I do appreciate everyone. We had a great turnout today. Had almost 50 people live on the call, which is fantastic. We're always happy to see our numbers have low attrition from the amount of attendance that we get registered for these. So if there is any questions, feel free to ask either myself or Saxon if you have questions regarding the technical aspect of investing in private equities, either through Florida funders or directly with something that you found outside of that. Give me a call. Saxon's always been a great resource and able to help our clients with anything with regard to the offerings that they have as well. So again, thank you very much. We'll stick on here until we have about a third of the people left. So until we have about 10, 15 people left on the call, just to make sure we get any questions that filter in afterwards. But thanks everyone for tuning in today. And if there are any U.S. Armed Service members, thank you very much for your service and have a great Veterans Day tomorrow. It's also the Marine Corps' birthday today as well. So we got a lot of great dates this week, and just want to say thank you. So we'll stick on here for a little bit longer, and if there's any questions, please get those filtered in.
Absolutely, and thank you all very much, Alex. I really appreciate everything, as always. And keep me in the loop if anybody has any questions. I'm around. My email is saxon@floridafunders.com. And then also I can be reached at 412-874-9064. Thanks a bunch. Have a great day, and I'll talk to everybody soon.
All right, yeah, then that looks like we got pretty much everyone else filtering out of the call, so we'll go ahead and end it there. Again, Saxon, thanks for being a part of this today. Appreciate the great content and information, and hope everyone else has a great rest of their day as well.
Great, thanks, Alex.